Okay, in this video, we're going to be looking at some more chart examples, or we're going to be looking at chart examples in this video, and I'm going to give you some, and I'm sure a question that a lot of you have is, so for like, we went over one way that I play it is resistance when broken becomes support going forward. So in many cases, whenever that ceiling gets taken out, which is resistance, a lot of times you'll find buying opportunities once price retraces back down into that level. And whenever support gets taken out, you'll find shorting opportunities or selling opportunities when price returns back into that previous floor, which is now resistance. But I'm sure a question that a lot of you have is, how do you differentiate the difference between a clean break and a stop run? How do we keep ourselves safe in that scenario? So for anyone that's kind of lost right now, here's what we're going to be talking about. So like we've already stated, resistance is an area on a price chart where price has failed to move higher in the past. But what happens to that resistance when broken? When broken, it becomes support going forward. When you get a clean break at that level, it becomes support going forward. So when price returns back down into that level, in many cases, you'll find really nice buying opportunities where you could piggyback that and get in for that next leg higher. But also, if you recall in the previous video, we went over fake outs. So a lot of times what you'll see happen is price will come up to these levels of resistance for the sole intention of taking out sell stops or taking out buy stops, and then it'll resume lower. That's a scenario that you'll see play out quite a bit as well. So how do we differentiate the difference between these two scenarios right here? How do we know when something's a clean break aside from just a little fake out? That's what we're covering in this video, okay? So I recommend you pull up your charts with me and follow along. It'll be a much better learning experience if you do that. So we're going to pull up USD/JPY right here, and we're going to break down this price action because this is a really good example. So here's a way that you can play. Just imagine with me for a second that you're shorting this, okay? USD/JPY. This is a really clean example of support broken becomes resistance, okay? And whenever you have this, like we just said, whenever you have support broken that becomes resistance, in many cases, it will give you some really good shorting opportunities, really good selling opportunities, okay? So let's take, this is our level of support or previous level of support. Remember, what is support? Support is an area on a price chart where price has failed to move lower in the past, okay? So right there, price came lower, came lower, came lower, came lower, and then boom, you get a nice big bounce, okay? That was a level of support. That was a level of support as well. Why? Because that was the low before you had that bounce. See that? That swing level, that was the low before you had that bounce up right there. Those are both levels of support, okay? And what happened right here? Price snapped that level of support. That's not a fake out. That's not a fake out at all. That's a clean break of that level. That's a really clean, a really strong break of that level. That's not shallow. That's not a shallow break by any means, okay? So this was a really good selling opportunity with support broken becoming resistance, okay? Now, why was it a good, so how do we differentiate the difference between a clean break and a shallow break? You do it, or the best way, the easiest way, the most effective way to do it is by the use of the fair value gap, okay? This is the best way to do it that I've found. So whenever you have a previous level of support broken inside of a fair value gap, in this case, we got a bearish fair value gap. And for anybody who doesn't know what a fair value gap is, I'm going to leave a few links in the video description that I want you to watch after this video. Both of those videos go over the fair value gap, what it is. So by the end, once you watch those videos, it'll be very clear what it is. And I'm sure a lot of you already know what it is. This is your fair value gap. 1, 2, 3. You got 3 candles, and in here, you don't want to see it touch. You got your imbalance in here. What happens? Price had that break of that level, really strong break. It does what? Enters a short term, or it enters a discount. It retraces back up higher, rebalances a portion of that price action, and it does what? It tests your key levels of now resistance, because remember, support when broken becomes resistance going forward. And a lot of times you'll see these levels respected immensely when they are inside your imbalances. That is the best way to place support when broken, or support when broken become a resistance. And for buying scenarios, you just flip it around. It's the opposite, okay? So we're going to find some buying scenarios where this occurred, okay? Okay, I want you to look right here. So now we're on a weekly chart of USD/JPY. You can see right here, you have this little imbalance. It's a small one, but it's a bullish imbalance to the upside that you had on USD/JPY. And notice, what do we got right here? We have our previous level of resistance. So why was this, let me mark it real quick so you can see it. Why was this a level of resistance? Because this was the absolute high that price hit before it traded lower. Okay, this was the high, and then it rejected and traded lower. That makes that a level of resistance. Okay, but what happened to that resistance? Price ended up curling up, and you got a really strong break at that level. Okay, so this is what we call a clean break, not a fake out, a clean break. Okay, I mean, sure, sometimes it could still be a fake out. Sometimes you're going to lose. Like we had a scenario up here where it didn't hold. It didn't hold that level and sold off. That's part of it. That's trading. But even in there, it did end up giving a little bounce that you could have played. But not to get too sidetracked, this is that level of support. It was inside your imbalance, and what happened? Price ended up trading. It traded back into that imbalance. You had your key swing level inside of that bullish imbalance, like that. That's key. You want to see the swing level inside of the imbalance. Whenever you have something like this occurring, you'll see in many times, more times than not, those levels get respected immensely. You get really, really nice respect. You see really nice respect for those levels when they are inside of an imbalance. Okay, what happened? Came down, respected it, closed it in. It rebalanced that period of price action, and then you get that next leg up. So that's one way to do it, to play these pullback plays. But another thing we had here, and another way to do it to know when you've had a clean break of a level, is by the use of Fibonacci. So if you take your Fibonacci and you plot it from this low to the absolute high, do you have 61% key Fibonacci retracement? That's our key Fibonacci retracement. It's 61%. So you can see right here, what do we have at 61%? So we have that level which is right smack on 61%. That's another way to establish if you have a clean break of a level and not a fake out, is by the use of Fibonacci. That'll keep you out of a lot of fake outs by having at least 61% retracement from the low to the high on that retracement. That's a really good way to stay out of fake outs. So I gave you two ways to do it. Number one, you have the fair value gap, which is probably my favorite, one of my favorites. Yeah, it's probably my favorite. And then the second, you have the key Fibonacci retracement, which is at least 61%. Okay? So that's one way. And in the next video, I'm going to be going over the other way to trade support and resistance.